Hi, and welcome to the tutorial for EWAVES Live. To get started, once you're on the ewaves.com homepage, all you need to do is click the Login button. This login will take you to live.ewaves.com. Now, alternatively, you could just type live.ewaves.com directly into your browser or bookmark live.ewaves.com to jump to the eWaves Live web application directly. You'll notice here on the upper right that I am already logged in. If I was not already logged in, then it would have prompted me for an email address and a password. Now, if you have difficulties with logging in, then just go back to ewaves.com, scroll down to the bottom here, and it says Contact Us. Just drop us a line, and we'll get the issue resolved as soon as possible. Let's get started. Now, the first thing you'll notice is that the two options you have here at the home screen are to search for markets or to browse markets. Now, since we don't have any particular markets in mind to search for, let's start with the Browse button. Now, before we talk about the markets that just popped up when I hit Browse, I want to draw your attention actually to this upper middle section here, just to show you that the search option didn't go away in browsing mode. It's still there, it just moved up to the top. Now, for any reason you want to get back to that home screen, you can just hit the back button here, or alternatively, click the logo on the upper left. Now, when you're in browsing mode, you might not necessarily want to see all markets at once. So if you bring your attention to this upper left area here where it says Markets, you'll see we've created a control panel in order to enable and disable different markets from browsing mode. These are organized by region primarily, and then by asset class within that region. So for example, if I only want to view US stocks, I would just select stocks here. Now I'm not in browsing mode, but if I click stocks, it will take me to browsing mode. And as you can see, we are filtered by US stocks. We have 399 results. Those are all the US stocks that are currently covered. Now, if I also want to look at ETFs, I would just select ETFs. And as you can see, the number of results just increased. Now, I could also select all of the other markets, which gives me a total of 563 results. Alternatively, I could deselect all of these, or just click clear. And as you'll notice, the number of results actually doesn't change. And that's just because when nothing is selected, you get the same behavior as if everything was selected. Now, at the moment, of course, we're only covering the United States region, but in the future, we expect to add more regions, as well as more asset classes and more assets. Now, if there's a particular market that you're interested in that we're not covering, that's not a problem. Just drop us a line, again, at ewaves.com. At the bottom, there's a Contact Us section. Let us know about the market that you want, and we'll get it added for you. The next control I'd like to show you is the sidebar toggle. It's directly to the right of the markets list here at the top. See, if you hover your mouse over it, it says Toggle Sidebar. And if you click that, it simply brings that little toolbar to the left and gives you more room to view the charts. And this way, the charts can become larger and a little clearer. Now, browsing through these charts is fairly straightforward. You just scroll down. But let's say you're scrolling down and one of these markets hits your eye, like gasoline here, which has this 5-wave move, 1, 2, 3, 4, 5, and then this huge, steep A-wave decline. Okay, so you want to take a closer look at this chart. Now, the easiest way to do that is just to hit Maximize Chart. And that will pop up a nice big full screen view, which makes it very easy to see this chart. Now, we're interested in this decline, so what we'll want to do is zoom in with the Zoom In button. Now, before I click Zoom In, I want you to notice this dotted line here. What that indicates is where the next zoom in is going to occur. So if I hit Zoom In, it's going to show me this region here, okay, as indicated by this dotted line. That's why the dotted line is green. It's the same color green as the buttons. So let's hit plus, and you can see it jumped right to where it said it would. And we can look at our 1, 2, 3, 4, 5 wave decline here. There's another zoom level here. Let's zoom into that one. Now we can see the beginnings of a third wave to the upside. So let's zoom out again. Go ahead and click the X. And you'll notice it remembered exactly where we were in this list, and we can keep scrolling and look at other markets. One final thing to mention about zooming is it works when you're just in browsing mode. You don't have to actually maximize the chart. So for example, in gasoline, I could have just zoomed in right here instead of going full screen or with any of these other charts that you see. Now, of course, if you already know the market you want to look at, it doesn't make much sense to scroll through all of these. So let's use the search feature that we talked about earlier to do that quickly. So if we want to look at McDonald's, we just type McDonald. And here you can see it says McDonald's Corporation at NYSE. We could have also typed in MCD, the symbol. Either way works. So let's go ahead and click on that. This is going to jump you straight to a direct page for this asset where you can zoom in and out as before. You have the option to maximize it if you want to get to that nice, really big full screen mode. But because this is a direct page, you can bookmark this if you want to jump to it directly in your browser later. And that can be handy if you're watching it day to day and you don't want to have to go through the process of logging in and searching. You can just click one button on your browser and jump straight to this. So let's hit the back button here and go back to our browsing area. Over here on the right, there's a grid size control. So the default is this big grid view, which shows you about 4 markets at a time. You can also use a small grid view, and this will allow you to see about 6 markets on your screen at once. And then finally, there's full view, where you can just focus on a single market at a time. Now you can scroll down to see additional markets. And if you scroll down pretty far and you want to go back up to the top, you just click this arrow here instead of scrolling all the way back up. It'll just jump you right back up to the top. Above the grid size control is a control which allows you to change the way the markets are sorted. The way that this works is you can sort either ascending or descending, depending on this toggle button, by various attributes of that market. Now, there are quite a few attributes on this list, and we're going to go through and explain these when we get to talking about the wave finder. The reason for that is because these attributes will make a lot more sense in the context of the wave finder, and they're a little more confusing when you're just talking about a market as an overall concept. However, there is one that we will go ahead and talk about that does make a lot of sense when you're talking about an overall market, which is the default sort value, which is called Ellioticity. Ellioticity is the degree to which a market is adherent to the Elliott wave principle. Now, since we've ranked them descending by Ellioticity, this means the highest Ellioticity markets are going to be first in the list. And in this case, this Las Vegas Sands Corp, or LVS, is the highest ranked market in terms of Ellioticity. Now, if we scroll down, we can see the number itself, Ellioticity, is 54%. This number here always reflects the attribute that you're sorting by. So it'll tell you the attribute and its value whenever you sort a list of markets. And this number should decrease as we scroll down the list. We look at Church and Dwight Company, it's 53, so it dropped. Akamai Technologies, 53. This gasoline futures contract, 52, so it's falling as we're going down this list. So things are sorted in the way that we expect. Now, one question you might ask about this Ellioticity number is, how do I know that 54% is a good number? Well, there's a few ways you know that. One way is simply by looking at this market and looking at the number, and you can get a feel for, hey, this is a very nice Elliott wave. Therefore, that 54% must correspond to a good Ellioticity. Another way of knowing this is simply by the fact that the highest ranked market got a 54%. So that's telling you 54 must be in the upper echelon, especially considering we're looking at 563 markets. Now, another way to put this number into context is just by going to ewaves.com and going to the FAQ. The FAQ, we have an entire section on Ellioticity. This is what are good versus bad Ellioticity values. And in here we have a little discussion on this. But the short answer is, with the current version of eWaves, 50% plus are very high quality, and whereas anything below around 38% is where you start seeing issues. So this is above 50, so we expect this to have a high quality Elliott wave. Now, if we really wanted to, we could flip this sort by toggle to sort ascending rather than descending, and this will show us the worst ranked market here first. So this is AUD-SEK on Forex. And if you zoom out, you can kind of see why this is the case, because it's just not clear with the amount of data that we have available at this time what this market is doing. Maybe if we had a little more historical data, then we could kind of disambiguate this. But at the moment, it's just not clear. It's not clear to me, and it's not clear to EWAVES. Now, EWAVES is communicating this very loudly and clearly. It says the elasticity is only 11%. So it's telling you that it doesn't know how to count this market, and it's telling you you should just ignore this for the time being. Now, if behind the scenes, the data provider did provide more historical data, and then this was disambiguated, then this number would automatically, obviously, increase if we got a clear wave count in the future on this market. So these numbers are dynamic, and they can change over time. So let's change that back, because obviously it's much more useful to focus on the high elasticity markets than the low ones. Now, one question that people ask about elasticity is, what time frame is this reflective of? When you say this market is highly adherent to the wave principle, are you talking about on a yearly basis? Are you talking about on a monthly basis, a weekly basis? What time frame? Well, the way we've designed elasticity is that it is invariant to the time frame. So this number corresponds to all time frames simultaneously. So, because this is a highly ranked market with a high elasticity, it means that the largest degree structure here, 1, 2, 3, 4, 5, this is high quality, as well as the very short-term price action is high quality. And you'll notice this in all of these top-ranked markets that, you have a decent Elliott wave at a short-term basis. In this case, we have a zigzag A, triangle, B, C, which looks pretty nice. A little messy in wave A, but the rest of the structure is very clear. But you'll notice as you zoom out, we have a very nice wave unfolding here. And if you zoom out even further, a nice wave unfolding at this degree as well, going all the way back to 1980. So again, this high number is reflective of the long term all the way down to the short term, which is why Ellioticity is a scale invariant concept. Let's dig into these charts a little bit. Now, the first thing you'll notice when looking at this chart is that there's no Roman numerals on it. Instead, EWAVES only uses simple numbers and letters. So motive waves are always numbers and corrective waves are letters. For example, we have an impulse wave here, 1, 2, 3, 4, 5, and a corrective wave here, A, B, C. All of these labels contain tooltip data embedded in them. So if you hover your mouse over a label, you'll see the date and the price at which that label occurred. And that is there for convenience. EWAVES denotes the relative degrees of each wave using sizes and colors. So the largest degree on a chart is going to be in red, followed by blue, which will be the degree that's inside of red, that is 1 degree smaller than the red degree, and then followed by green, which is 1 degree smaller than blue, and then purple, and then eventually, if we zoom in, you'll see it turns gray, and then from gray it goes back to red, and the cycle of colors continues from there. Now, one thing you'll notice on this chart is that this red wave 1 got cut off, so the label is not completely visible. That is actually on purpose, and you'll see this all the time in lots of charts. It's because this degree is not relevant for the picture you're looking at. In this picture, what's relevant is 1, 2, 3, 4, 5, and now we're going to bounce. If in the future wave 2 gets put into place here, then that 1 will become relevant because it'll have another wave to relate it to. And when it becomes relevant, then it'll become more visible. Now, just to drive this point home and kind of give you another example, take a look at this chart. We have a big B wave going down, A, B, C. That's the 3-wave structure of B. And now we're going up in a C wave. If we zoom in, notice that that big B goes away. It's not really relevant for this picture, which are very small degree moves. But again, if you see that cutoff letter there and you want to know what it is, all you have to do is zoom out and, oh, there it is. So at this picture, that B becomes relevant, whereas at this picture, it's not relevant. Now let's scroll back up here to Las Vegas Sands Corp. One particular label in this chart which stands out is this 0 label here. First of all, it's the only 0 label in the chart. It's the largest degree. This is the origin of the chart, and all charts have this origin point. If we zoom out, it'll kind of make a little more sense.
If we had started counting from here, let's say, and we tried to count up into this high, obviously the market would have broken down, broken below this low, and invalidated the wave structure that we were trying to do. So this is really the only reasonable place to start counting from in this particular chart. Now, there is one alternative to trying to count from somewhere further along the chart, and that's by counting from somewhere before the chart ever happened. And we actually do this in the Dow Jones Industrial Average by pre-pending data for the London Stock Exchange going all the way back to 1697. We also take that data set and use it as the basis for several other major indices like the NASDAQ, which didn't emerge till much later. And this gives us a larger picture of the NASDAQ by having sort of a synthetic history of the NASDAQ. But for most individual stocks, we don't really have the ability to create a synthetic history. There's just no way of knowing what that history would have been.
Now, there's one last detail of these charts that I'd like to talk about before we move on to the wave finder. And that has to do with the capitalization of the letters used in corrective patterns. Generally speaking, to use capital letters, we use them for zigzags such as these. We use capital letters for flats. And there's a good example of a flat in that Akami Technologies picture right here. A, B, C, A. 3 waves up for B and 5 down in C. And we also use them for complex corrections. If we zoom into Church and Dwight here, there is a W, X, Y right here, and that uses capital letters. There's one corrective pattern that does not use capital letters, and those are triangles. So here you'll see a triangle A, B, C, D, E. Now, why are triangles different? There's 2 reasons. The first reason is because the moment this A gets put in, at this point in time, you'll notice you have a 3-wave move that's labeled with an A label. If this was not disambiguated by using lowercase indicating a triangle in progress, there would otherwise be no way to really tell whether it was a triangle or a flat. This is the only pattern that has this issue, is flat versus triangle. All other patterns can be disambiguated by their internal structures very early on. So this just gives you that extra little bit of clarity when you're looking at a chart. The second reason is because a triangle is a 5-wave move, as opposed to a 3-wave move like all of the other corrective structures. That may not seem important now, but in a moment when we start talking about the wave finder, you'll see that it is important to be able to address the position within a pattern by its label. And it is very useful to be able to say C using capital letters to indicate the end or the final wave of a pattern versus a lowercase c, which is not the end of the pattern. For a triangle, the end of the pattern would, of course, be the lowercase e. Okay, I think we've explained enough about these charts so that you should be comfortable interpreting them. One thing we haven't discussed yet are the implications of a chart. So the implications of a chart are not so much concerned with the past, but with what is going to unfold going forward. So if we zoom out here for a second, this puts this wave 4, this green wave 4, into perspective. As you can see, we've got 1, 2, 3, 4, and now we expect a wave 5. How large should wave 5 be? Well, at a minimum, it should take out the high of wave 3. But if you just look at the size of 1 and the size of 3, you could imagine that wave 5 should be commensurately large with these previous waves. So that kind of gives you an idea of what to expect in this market. Now, we kind of got lucky in that this market was at a major turning point here. But it can take quite a lot of time to scroll through different markets looking for interesting scenarios such as this scenario here. It'd be really convenient if there was a way to automatically find these kinds of scenarios across many different markets instantaneously. Well, we can do that. We can do that using the wave finder. Now, to be precise, the job of the wave finder is to find currently unfolding waves. In other words, waves that are unfolding today in real time, not historical waves. For example, if we were to zoom out here and look at a wave from the past, like this impulse wave here, the wave finder will not find you this wave. This wave is interesting maybe for research purposes, But for someone interested in real-time activity of this market, it's long since passed and is no longer of interest. So what are the unfolding waves? To answer this question, we could start by zooming in, and you'll immediately start to see some unfolding waves here. We've got 1, 2, 3, 4. Wave 5 is unfolding. We've got 1, 2. Wave 3 is unfolding. These are not very interesting, though, because they're so small. Personally, I think the most interesting unfolding wave on this chart is the green wave 5 that is heading up in this direction here. So this type of wave 5 is the type of wave you might be interested in detecting using the wave finder. It's an unfolding wave, it's quite large, and it's just begun. We can do this exercise with different markets. For example, in Akami Technologies here, there's a purple wave 3 that is coming off of this purple 2 and heading in this direction. And if we zoom out, we can kind of imagine that it's probably heading up somewhere around this area here. And of course, that wave is just one part of a larger wave that ultimately is going to be a blue C coming off of this blue B going way, way off into this direction here. Okay, I think we've talked enough about the waves we're actually going to be finding. I think it's time to actually turn on the wave finder. Let's toggle the wave finder on. All right, now the first thing you notice, we've just zoomed all the way out. Things have turned this kind of light gray background color. We have this dotted line. In fact, all the charts look like this. So what is going on here? All right, well, let me explain. With the wave finder, we are trying to find a wave. That's what this wave here means. This is just the wave you're looking for. And you need to provide a set of attributes that you're looking for in order to narrow down a particular wave from each chart. For example, you might want to say, I only want third waves. Show me third waves. The question is, well, which wave in this chart do we give if multiple waves meet your criteria? Well, the default behavior of the wave finder is to always give you the largest wave that met your criteria. And since we didn't put any criteria here, we got the largest possible wave in the chart, which we sometimes refer to as the super wave. It always starts at this origin point, and it continues through the entirety of the data. Now, why did it highlight everything in this light gray color? That's because the super wave degree is gray, and so whatever wave you find, it highlights the existing structure of that wave using the color that matches the degree of the wave that you are looking at. Of course, the super wave is not very interesting. The mere fact that it exists at all is more of a technical detail than anything else, because the EWAVES engine ultimately needs to amalgamate all of the fractal structure of the market into one single wave, and that is the super wave. So in order for us to get a little more granularity here with our search, we need to actually specify some attributes for the wave. Now let's go ahead and pop open that list of wave attributes. Now, I'm not going to go through every single attribute and describe it in detail here. We'll just use a few of them for the purposes of illustration. If you want a detailed description of each attribute and how you would actually use it to help you find waves, go to the FAQ. There's a section here for the wave finder, and we go through every single individual attribute. You can get a detailed description and an example of how you can use it. Let's scroll back up to the top, because as we start narrowing down our criteria here, the number of results will probably decrease because not all markets will have waves that meet our criteria. Let's start with the duration wave attribute. This is the simplest attribute that can really help narrow things down quickly. Duration refers to how long the wave has been in force thus far. Because a wave must have been in force for a certain amount of time, duration is useful for finding existing trends. Okay, it's not really there to find major turning points. If you're interested in major turning points, duration expected would actually be more useful. Duration expected refers to how far the wave is expected to travel over time. So even if the wave is only 1 day old, it may still be expected to last for, let's say, 400 days. In which case you just emerged from a major turning point. So let's choose duration, because this is a simpler one that we can start with. Now, when you first add an attribute, One of the things you'll notice is that the units are written underneath. This is duration in days. And the total range varies between 0 and a huge number of days. These are the maximum number of days that EWAVES can represent. So of course, all markets will have at least one wave with a duration between these two numbers. So this is not very interesting. We need to narrow it down. So why don't we only find waves with a duration between 50 days and 100 days? The number of markets has been reduced, and that's because not all markets had a wave that met our criteria. Now, the first one that we found here is in Akami Technologies, and it looks like it's an unfolding wave 3. You'll notice that this chart is zoomed in, and that's because the chart automatically zooms so that you can see all of the criteria that you specified in the wave finder. In this case, it was just a wave with a particular duration, so you're seeing that wave right here in this window. Now, if we zoom out just a little bit, you can kind of see a little more context for this wave. We've got a 1 here, a 2 here, and then you can see that this third wave fits in with this structure that already exists. This is the unfolding third. Now, you'll notice that the background here is highlighted in purple, and that's to match the fact that this is a purple wave that is unfolding. If it were a red wave, then the background would be highlighted in red, and so on. Now, this wave does not actually end here, obviously. It needs to go much further. But to avoid drawing the target in the actual location, which would go way off the chart, somewhere up here or beyond, we just kind of draw it with an arrow. This arrow kind of indicates this wave is going in this direction, and it's going to continue. Now, if you want to know an estimate of where this wave is actually going to go, you can hover your mouse over it, and the tooltip will give you an estimated time and an estimated price. However, be forewarned that targets are derived by extrapolating the structure of the wave thus far, and therefore, because this wave is early in its formation, the target is very much a guess at this point. However, as the wave gets closer and closer to completion, the target gets more and more refined. If we zoom out for a second, you'll notice something, which is that the target now, price-wise, gets placed in its correct position. And that's just because, by virtue of the fact we zoomed out, there was now more room on this chart to place it closer to its final destination. And so the program just did that for you automatically. There's no reason to put this beyond that point. So that's just there for convenience purposes so that you can see 1, 2, oh, okay, and 3 is expected to go to about here in price. Now, of course, in time, it's still expected to go quite a bit further to the right here. But again, we don't want to display this going off the chart, so that's why we clip the target to the boundaries of the chart that you see here. Now, you may notice that the Elliotticity value written beneath this chart is 59%. However, that's a much higher number than what we had before for Akami Technologies. So what changed? Well, it's simple. The Wavefinder is turned on, so now the values written beneath the chart are reflective of the attributes of the wave that you found. In this case, this is the Elliotticity of this third wave here. The reason we rely on the wave's Elliotticity here instead of the Elliotticity of the overall market, a term we've sometimes referred to as a market's total Elliotticity, is because it's a little more granular and a little more precise. The Elliotticity of this wave only takes into account just the context that it needs and that it's relevant for this particular wave. So as an example, if we zoom all the way out, the quality of this decline is not really relevant for the Elliotticity of this wave here, whereas the quality of this decline would be relevant for the total Elliotticity of the market. So we just get a little bit more precision when we rely on the Elliotticity of the particular wave that you found, which is obviously the wave that you care about. Now, you may be interested in waves that have been trending for a little longer than just 50 to 100 days. In order to look at those, it's very simple. We can just increase this number here. So instead of 50 to 100, let's look between 50 and let's say 400 and see what we find. Now, that third wave we found earlier would actually fit this criteria here. Okay, but so does this C wave. This also fits this criteria. And remember, I said when multiple waves fit the same criteria, it always gives you the largest possible wave, which is generally the one that you want. Now, it's kind of funny because Akami Technologies has topped the list again. This wave that we found is the highest elasticity wave, meeting this criteria of all the markets, which is a testament to the fact that at this time, this market has some very clear unfolding waves. If you'll notice, instead of being in purple like before, now this is shaded in blue. And of course, we have the blue sea extending off into this direction here. Now, you may be getting tired of seeing Akami Technologies, so now is a good time to revisit talking about the sorting feature. So earlier I said these were attributes of markets, but when the Wavefinder is turned on, they're attributes of waves, specifically the waves that meet your criteria in the Wavefinder. Now, if we pop open to see what the options are, these may look familiar because these are the wave attributes. If we go over here to add attribute, pop this open, these are the same values right here. The only ones that are not available for sorting are label and type, because these are not numerical attributes, so you can't sort by them. Let's go ahead and choose a different value here in the sort by area. Now, one of the wave attributes that I like sorting by is the linearity. This refers to how line-like a wave is in its movement. So, for example, impulse waves would be expected to have a high linearity, whereas triangles would be expected to have a low linearity, because they tend to follow more of a two-dimensional path in their evolution. Let's select linearity and see what we get. So the most linear wave that we found here that is meeting our criteria here of a duration between 50 and 400 days is this wave down in the UNG, United States Natural Gas Fund. As you can see, we've got 1, 2, 3, 4, and working fifth wave right now. And this linearity, you can see, translates to very small retracements against the trend. So this is a real powerhouse move that we're looking at. Now, the sort by value is, of course, linearity, and that's why it's written here underneath the chart. But because we're sorting by something other than elasticity, just for convenience, elasticity is still written here for us, just because that number is so important. Now, if you're interested in linearity, but you don't want to sort by linearity, say you're sorting by elasticity, then over here in the Wavefinder, you could still express your interest in linearity by adding it as an attribute. So let's go to linearity here, and let's say on the low end you want 85% or higher. Okay, now this brings up UNG again. This time though, because you're sorting by elasticity, you know that this is the highest elasticity wave that has a linearity of 85% or higher. Okay, so I think by now you should be comfortable with the idea of using the Wavefinder to find a wave with a particular set of attributes. Let's go ahead and get rid of linearity, just to simplify our query down a little bit. There are limitations to just looking for a wave with particular attributes. Like, let's say you're looking for a wave, its duration is 5,400 days, and you also want it to be of type impulse. We can go ahead and add that in, but you want it to be in wave 5 of that impulse. So let's go ahead and see how we can do that. Well, we could say that it's a certain percentage complete. We could also specify a label for that wave, but if you'll notice, there's actually no way here to specify where exactly we are within this impulse. There is a way to do this. In order to do this, we need to introduce the concept of context waves. Now, the context waves are not the actual waves you're looking for. That's always wave, okay? So the wave that's drawn here is always wave, and the values written here underneath the chart always correspond to wave. What the context waves do is simply allow you to address waves that are related to the wave you're actually searching for. So let's hit Add Context Wave. Now, the first option we have for a context wave is the prior wave. This is the wave that came right before wave. A common use for the prior wave might be to say we require the prior wave to have type triangle. That way the wave itself would be a thrust out of a triangle. The next option is child. Child is the currently unfolding wave that is 1 degree smaller than wave. So a common use for that might be to say we require the child to be either 2 or 4 because those are corrections within an impulse wave. Now we also have the option to specify the child that is 1 degree smaller than child, 2 degrees smaller, and 3 degrees smaller. Now we could have called these the grandchild wave, the great-grandchild wave, and the great-great-grandchild wave, but at some point that becomes even more confusing than just sticking with the simple word child and then offsetting it to even smaller degrees. Finally, we have the parent wave, and this is 1 degree larger than wave. This is very useful because you may want to look at waves, but you may say, I only want waves which are unfolding within the context of a larger third wave. So you could add the parent context wave and say that this needs to have a label of 3. We also have the parent wave of 1 degree even larger than parent, 2 degrees larger than parent, and 3 degrees larger than parent, which are the grandparent, great-grandparent, and great-great-grandparent wave. So for what we're trying to achieve now, let's choose the child wave, because what we want to do is look for waves, the duration between 50 and 400 days that are impulses, and we want their child wave, the wave 1 degree smaller than the wave, to be a 5th wave. So let's go ahead and do that. And now if you notice, if we select an attribute for this context wave, these are all the same attributes that you have available for you for the wave itself. So let's select label. And if we click labels, this is where we have the option to specify 5. So let's hit that. Okay, so with this criteria, our top ranked wave occurred in Robusta coffee. We've got 1, 2, 3, 4, and working 5 to the downside. So this 5th wave, which is the currently unfolding child wave of this impulse, is what we've specified here as the child wave needing to be a label 5. As always, we have our target wave here. And if you hover your mouse over it, the tooltip will tell you where the program estimates that wave 5 is going to go. That said, it is just an estimate, and wave 5 is quite early in its development. There's no real discernible substructure in wave 5 at this time. So as wave 5 continues to develop, this target will get more and more refined. The most important thing at this moment is the wave structure that you have so far, especially this expanded flat ABC structure, which is a counter trend move, which tells us we were likely ready to go in the other direction here. That's why EWAVES put a 4 here. And of course, the overall quality of this Elliott wave so far, which you can tell just by your own visual inspection, but also by the high Ellioticity number. Okay, now we've used the wave finder, and we found this interesting scenario in Robusta coffee. We probably want to pay attention to this market each day because as new data comes in to EWAVES, this chart and wave count will update itself. Right now, chart updates occur at about 8:15 p.m. However, that time is subject to change, so for the latest information, go to the FAQ, scroll to the top, and under General Questions, there's a question here that says, when do the EWAVES live charts update? Pop that open, and it'll let you know the latest information. Now, if you're interested in paying attention to this market regularly, then of course the easiest way to jump to this is using the search feature that we showed you earlier. So we can simulate a fresh login just by clicking on the home button here and turning off the wave finder. So if you've just logged in for the day and you want to check on Robusta, just go type Robusta in here, jump to it, and there you go. Now you have the latest, most up-to-date wave count. I hope you enjoy EWAVES. The reason we built EWAVES is ultimately because it's the tool that we, as Ellioticians, really needed. We put a huge amount of work into building this engine. It really has been a decade-long process of research involving studying hundreds of historical Elliott wave patterns, which has given us a fairly intricate knowledge of Elliott wave behavior. So when you use the wave finder to find high Ellioticity waves, I think you'll find that the quality of the wave counts is beyond what you'll see anywhere else. So please, if you have any ideas for features for EWAVES Live, then let us know. And also, if you're using eWaves and you find a market where you think, hey, I think this market should be analyzed in a different way, then just send us an email on that. We'll research it and it may lead to improvements in the engine. So this is really an ongoing process. So in conclusion, I hope that you enjoy eWaves Live, and we'll certainly continue on with our work and make eWaves Live as good as we can.